Okay, cool. So you have to come into the markets with the right mindset. Okay. So when I talk about trading psychology, what I mean is your mental state and your emotions as a trader. And this is going to determine, this is the key part. It's going to determine the success or failure of your trades. Okay. However, you are feeling, it's going to determine your success or your failure. Okay. Because your emotions is what causes you to make mistakes. Your emotions is what causes you to do things like over leverage. Okay. It represents the aspects of a trader's behavior and characteristics. Sorry, guys. I've got it on mute everyone as they enter, so I don't know why people are allowed to unmute, but for whoever is unmuted right now, there we go. I think I got it. Guys, if you could just check that you're muted, because I actually can't see anyone's thing unmuted, but I'm hearing feedback, so I don't know what's going on. Someone named Perfect. Your name on here, Perfect. If you could make sure you stop unmuting yourself, that would be great. Awesome. Okay, cool. So, pretty simple, right? Your psychology, your mindset when you enter the market. Now, before we actually dive into how you're going to improve this, because as a beginner, for those of you who put a 2 or a 3 in the chat box, in the beginning, trading is going to be a roller coaster of emotions. Okay. And there's not really any way to get around that. And it's because you're new at it. So when you win a trade, even if it's like a pound, you might feel like absolutely elated. And if you lose, again, even if it's only like a pound, you might feel completely devastated, right? This was definitely me when I first started trading. Okay. But if we can pinpoint what is causing this, then obviously we can fix it. So, first things first, in the chat box, what two main emotions do you think influence someone's trading? Okay, they've done loads and loads of studies. What two main emotions, I want you to put it in the chat box, would influence someone's trading? Let's see what we got here. We got anxiety, greed, revenge trading. Okay, greed a couple times, fear of losing. Okay, so you guys have got it. Okay, the two are greed and fear. Those are the two biggest emotions that will impact someone's trading: greed and fear. Make sure to write that down. Now, if this is something you have experienced, okay, maybe fear of losing a trade, you see red, you look at your MetaTrader 5 and you get, anxiety because you're seeing red. What causes this? Okay, because again, you want to get to the root of why this might be a problem. So, what factors in someone's life? Okay, I think we're all human beings. We all go through life. We all have different, things going on in our life. What could affect these emotions of fear and of greed? Okay, what could happen in someone's life that could affect this? So I'm thinking, let's say things like debt, right? If someone has debt, they might be fearful of losing a trade because they're already in debt, right? They might be, desperate for money. Somebody put bills. Excellent. Good. What else? Guys, I want you to really think about this because I guarantee you there's over 150 people on this call. I guarantee you are going to feel this at one point or another, especially if you're in the beginning of your trading journey. Okay, if you don't have a job, yeah, good. Okay, your current life state. So maybe things aren't going well, right? Maybe you're just kind of struggling paycheck to paycheck. Okay, you want to make money fast. There we go. A lot of people want to do that. Past experience. Yeah, maybe you've had a bad experience before. Okay, excellent. Others' trading results. That's a great one. You look at someone else's results and think, oh, why am I not making that? So and so just made like 150 pounds in one trade. Why am I not doing that? Okay, good. Right, guys. So these are all really, really good answers. Okay, really good answers. And I want you to actually reflect on yourself. If you are fearful of losing a trade, there's probably a few reasons why. Okay, number one, you may have over leveraged. So you took a lot size that was way too big for your account and you're seeing, the red go higher and higher and higher. And that might be causing you to stress out because you've risked too much. Okay, this is part of what we're going to talk about today. Whenever you enter the market, you should only be risking 1 to 2% per trade. So let's say you have 1,000 in your account and you only risk 1%, that's $10. Losing $10 should never cause you to feel fear, stress, and anxiety. if you've risked the proper amount. Okay, so that's what we're going to talk about. I mean, somebody just put high risk, high reward. You shouldn't be trading, in my opinion. I'm just going to be real, right? If you're risking high, then you better be ready to take those losses, and you better not get on your mentor and say, "Oh, I lost a trade." Honestly, that is my biggest pet peeve. Right? If you're going to risk a lot, then you better, keep your mouth shut and not complain about it. And you're the person who's going to say, "Oh, trading doesn't work because you've risked too much." Right? I'm just being real. Okay? So we're going to talk about that. Okay? But if you're trading right now and this is like your last dollars and you need that trade to win in order for you to pay your bills, you shouldn't be trading. Again, I'm going to be super real. Okay? We've all joined this because we want to make money. But if you are too emotionally attached to that trade, you need to step away. Or you need to start with a demo, make sure you are solid, you know exactly what you're doing, you're getting consistent results. Because if you are too emotionally attached to that money, it's not going to go well for you. Okay. Number one, it's just going to cause you stress and anxiety if you lose a trade, but it's also going to cause you to get greedy because you're desperate to make that money. You're going to risk too much. Okay, so what are going to be some things? Then this is going to be an ongoing journey, right? If you've been here for a month, if you've been here for 6 months, if you've been trading, like I've been trading for 4 years, and I still have to, continue to monitor my emotions. For the most part, I can take a trade and I don't even look at my MetaTrader 5 anymore because it doesn't affect me. Okay, but I can get a bit greedy. I'm not going to lie to you, right? I want, I got money, so I'm going to, I want to make more, right? So what can we do to improve? Well, number one is education. You guys have joined this company because you want to learn how to trade. You need to be consuming as much education as you can. Okay, as much education as you can. Okay, so you should be on the ECA watching all the videos. You should be plugging into your favorite educator. Do you have to watch every single educator's live sessions? No, right? That's almost too much. You're looking at too many different strategies, but find someone that you like and continue to plug in with them. That might be Ralph, that might be Donnie, that might be Edris. Whoever it is, continue to plug in. Continue to attend sessions like this. Right? There's lots of different teams with lots of different sessions going on every single day. You should be continuing to plug in. Okay, so that's first and foremost. Number two is personal development. The only thing that's going to help you regulate your emotions is growing yourself as a person. Again, we have all entered this, this company, this industry, okay? And we're flawed human beings, okay? The person I was 4 years ago, very, very different to how I am now. Okay, so don't just educate yourself on the trading side. You need to grow yourself as a person. Read books like Atomic Habits. Trading is all about discipline, and it's all about creating a habit, sticking to a trading plan. So a book like Atomic Habits, great book to read. A book like The Psychology of Money, so you can try and figure out why you're thinking what you're thinking about money, how you're attached to your money, your relationship with money. Okay, so you need to constantly be developing yourself. Okay, some that you might want to listen to in terms of belief, right? And growing your mindset. Strangest Secret by Earl Nightingale. You can listen to it on YouTube, Spotify. It's completely free. It's only 30 minutes. No excuse not to listen to this. Okay. Think and Grow Rich by Napoleon Hill. Anything by Jim Rohn. He's one of my favorites. He has to go on there. Bob Proctor, okay, talking about, your paradigm. Again, that's going to really help you, dissect your relationship with money. Okay, and anything inspirational, Tony Robbins is another really good one. Okay, sticking to your trading rules is going to help with your psychology. If you can stick to a set of rules, okay, and I think I have them on in the next slide. Ones that I follow, okay, your mentor, you might follow something slightly different, but if you have a set of rules every day, so for example, if I lose 3 trades, I stop trading. Or if I win 3 trades or 3% of my account, I stop trading. Okay, all of these kind of things. Okay, and having clear goals for yourself. Okay, if you have clear goals and clear targets when you enter the market, the less chance you're going to over leverage and over trade. Okay, so if your goal is to grow your account by 2% per day, 3% per day, 5% per day, whatever the case may be, okay, once you've hit that target, you stop. But also just have goals for life. right? In the next 1 month, if I make this much trading, I'm going to do this, right? Maybe you're saving up for a car. Maybe you're actually looking a year ahead of time and you're saving up for, a mortgage. Okay, have a trading plan that is going to get you there. And chances are you will then stick to it. Okay, so those are some things that's going to help improve your mindset. And these are things that you need to work on every single day. Okay, now once you start getting your mindset right, okay, because that's the first thing, we can't even start taking a trade if we're not working on these things. Okay, so how do we actually make money? And if you're new, especially for those of you who put a 2 and a 3, okay, you've probably started taking trades on demo. And when you're taking trades, you might be randomly taking lot sizes and you're seeing, money go up, money go down, but you don't actually know how that's being calculated. For me, I think if you can understand this, it really helps you get a handle on your risk management. Okay, so first things first, when it comes to trading, obviously, the more the market moves in our favor, the more money you're going to make. Okay, so if you took a buy position, meaning the market is going to go up, the more the market goes up, the more money that you are going to make. Okay, same thing if you took a sell position, right? The more the market goes down, the more money you're going to make. Okay, but how is this calculated? This is calculated in something called a pip. Again, if you were taking notes, I highlight stuff, I put stuff in red. That's probably the stuff you want to get down, just saying. Okay. But a pip is simply a unit of measurement in the market. So for me, the best example I can think of is, let's say I'm, if I were to tell you how tall I am, I'm 182 centimeters tall. Okay. So that centimeter is a measurement of my height. Obviously, if I was shorter, who's on the call here? I saw Sammy T. She's, I don't want to call her short, but she's a lot shorter than me, right? So if I'm going to give you Sammy's height, right, in centimeters, hers is obviously going to be smaller. Okay. So the centimeter is measuring height. Okay. If I were to ask, where's the nearest Starbucks? And it says, oh, it's like 250 yards away. The yard is a measurement of distance. So the pip measures how far the market has moved. Okay. And we're going to break down, okay, exactly what that means in a second. But how much money we make is based on how much we have risked per pip. Now, this is really, really important. Okay, how much we have risked per pip. Now, this is something called a lot size. So every time you take a trade, you need to put in the lot size for that trade. And this is going to determine how much of your account you are risking. Okay, make sure to write that down. Sammy, 5'5". It is, it is a lot. It's a bit shorter than me though, Sammy. Okay, cool. So that being said, obviously, however much we've risked, it goes both ways in terms of making money or losing money. Okay, there's actually 2 rules, and I don't have this on this slide, but I would write this down. When it comes to trading, okay, there's 2 main things, 2 main rules you want to follow. Number 1, and if somebody could type this in the chat box, that would be great. The number 1 thing you want to do is capital preservation. You actually want to think about preserving and protecting your account before you move on to number 2, which is capital growth. We're all here to make money, but we don't want to lose money. So you need to think about preserving your capital before you grow your capital. Okay, so let's go through this. Let's break this down. There's 3 different lot sizes that you can use: micro lots, mini lots, or standard lots. Now, I'm going to say right now, and I put it in big caps locks, if you have anything less than $1,000 in your account, you shouldn't be using mini lots or higher, especially with the signal providers we have. And I'm going to break down why. Okay, for those of you who use Plutos, stop losses are quite big. If you have less than 1,000 in your account, you're risking way too much. Okay, even Edris trades. Edris's trades are like 50 pips for a stop loss. If you have less than 1,000 in your account, you're risking too much. Okay, now we're going to break this down. You guys don't have to listen to me, but personally, right, if you have less than 1,000, I wouldn't even be looking at mini lots, standard lots yet. Standard lots, you shouldn't even be touching unless you've got like 10, 20, 25K in your account. So maybe if you've got a funded account, you could be looking at taking standard lots. Okay, you'd be risking way too much. Okay, so let's start with micro lots. Okay, micro, the smallest possible lot size you can take is a 0.01. That's the smallest. It doesn't go any smaller than that. Okay, and 0.01, you would be risking 10 cents or 10 pence, whatever currency, you're using, 10 cents per pip. Again, I'd probably write this down. Okay, if you took a 0.02, that would be 20 cents. 0.03, 30 cents. So on and so forth, all the way up to 0.09, which is 90 cents per pip. Okay, so let's look at the first example. Okay, you've taken a 0.01, smallest possible lot size, and it was a 10 pip stop loss. Okay, now I've chose 10 pips for a reason because Ralph often has stop losses between like 7 to 10 pips. Okay, and I'm going to keep mentioning our educators because for those of you who are new, you're probably just leveraging signals right now. Okay, so you need to understand whatever educator signals you're taking, they all have different trading styles. So they're all going to have different stop loss sizes, meaning you need to adjust your risk depending on whose trade you're taking. Okay, so the first one would be like a Ralph trade, a 10 pip stop loss. Okay, so I want you to tell me in the chat box, how much money would I lose if this goes and hits stop loss? Remember, I'm risking 10 cents per pip because it's just a 0.01 and it's a 10 pip stop loss. And I've even broken down how you would work that out if you're doing it on a calculator. Okay, I'm not the best at mental maths. Okay, so I would have to, do it on a calculator. Okay, perfect. $1 or £1. Thank you. Is it Rizzle? I don't know if I'm saying that right. Perfect. Okay, $1 or £1, €1, right? Whatever currency you're trading in. Okay, so $1. Okay, not a lot of money. Okay, but when you look at the amount you're going to lose, it's not actually about the amount, it's the percentage of your account. Okay, so $1 would be 1% of a $100 account. So if you've only got like $100 in your account, you shouldn't be touching anything above 0.01, right? Because even with this small stop loss of only 10 pips, $1 is 1% of $100. Now, if you've got $100, you might want to risk more, okay, 2%, 3% of your account, okay? It's totally up to you. But again, you just want to be thinking about the percentage. I personally don't risk more than 1 to 2% per trade. In my funded account, I only risk like 0.5%, right? Because I don't need to risk any more than that. If you're risking 5%, 10% is, those are crazy, crazy numbers. You should never, ever be in a position where one trade is going to cost you like 5% of your account. To me, that's crazy. Now, there are some people who risk 3, 4, 5%, but they're people with a lot of experience. Okay, they're people with a lot of experience. So for you guys who are beginners, I would stick to this. Only risk 1 to 2%. Okay, so good. So that's a Ralph trade. Let me just put Ralph here. Okay, the next one I've put Edris. Now, Edris often, he used to do 35 pip stop loss. I think he more does 50 now, but let's just do 35. Okay, same thing. I'm just taking a 0.01, but an Edris trade has a bigger stop loss. So if this goes and hits stop loss, how much will I lose? Put it in the chat box for me. How much would I lose if this goes and hits stop loss? And again, I've broken down for those of you who need to use a calculator. No shame in that. Okay, get out your phone. You would just put 10 cents, 0.10 times 35. That's how you would work it out, like this. So someone tell me in the chat box, how much would I lose if this goes and hits stop loss? Thank you, Idris, $3.50 or £3.50. Good. Excellent, excellent. Easy, right? Okay, $3.50. But again, it's not about the dollar amount. How much is that, okay, of your account? That would be 1% if you had $350 or £350 in your account. Okay, now let's look at a Plutos trade. For those of us who have Plutos, much bigger stop loss. Some of the gold trades are about 80 pips, but the majority of the trades are like 100 to 120 pips. Okay, significantly bigger. How much would I lose? Again, we're still just using smallest possible lot size. How much would I lose if this goes and hits stop loss? Somebody tell me. Hopefully you guys don't need to work it out with a calculator anymore. There we go. $10 or 10 pounds. Good. So see the difference. It's the exact same lot size. Okay. But because the stop loss is bigger each time, it means we're risking more money. Okay. So $10 is 1% of a $1,000 account. So if you have less than 1,000 in your account and you're trading Plutos, you just got to be very, very wary. Okay. If you had $500, that would be a 2% risk. $10 would be a 2% risk. Okay. Now, I know I'm throwing a lot of numbers at you, and your brain might, like, when I first started learning this stuff, I was like, no, maths is not my thing. What I want you to concentrate on, especially those of you who've taken notes, is just look at your account size or how much you want to. If you're still in a demo, that's cool. But however much you want to start within your live account, I would sit and work this out. Okay. If I did a 10 pip stop loss, how much could I risk where I'm only risking 1 to 2%? If it was 35 pips, it was 100 pips. Okay. You should not be using the same lot size for a Plutos trade that you would for a Ralph trade. Okay. If you do, you're just setting yourself up for like a world of hurt. I mean, it might be really good if it goes and hits take profit, because it means you're going to, obviously, if you risk too much, you're going to make more money. But those are bad habits to get into. Okay. So drop a 1 if that's making some sense, especially for those of you who are new. Okay. Hopefully you can now see, okay, based on your lot size is going to determine how much you would lose, but also how much you would gain in a trade. But again, you want to think about the loss first. You want to preserve your account first. That's the first thing you want to be thinking about. Okay. Now I've just put a little note here, okay, about Plutos. For those of you who've added on Plutos, if you have anything less than 1,000 in your account, personally, if I were you, I wouldn't touch the Bitcoin or the JP255 trades. Reason being, okay, she attends those trades to be for 10K accounts, and she puts an optional stop loss. She only started doing this about 6 months ago because people complained there wasn't a stop loss. She doesn't put a stop loss on those trades, meaning she is willing to hold those for a long period of time and a lot of drawdown. If you have a small account and you follow what she's doing, you could very easily blow your account. Okay, so that's just a word of advice when it comes to Plutos. If I were you, I wouldn't touch those. I wouldn't touch them. Okay, now let's very, very quickly. I focused on micro lots because that's what most people are going to start with 1,000 or less. Okay, but let's really quickly look at a mini lot. Okay, so a mini lot is then 0.10, okay, up to 0.90. So 0.10 is $1 or £1 per pip. Same applies to funded. Yeah, Craig, I personally, I wouldn't take those with funded accounts because you can't really, she might go like 5% into drawdown, and that could literally blow a challenge if you were doing a challenge. But it's up to you. Yeah, it's up to you. Not even 10K funded. She doesn't recommend them on funded at all. At all. Okay, cool. So, mini lots, sorry, $1 per pip. Obviously 0.20 would be $2, 0.30, $3, all the way up to 0.90, which would be $9. Okay, so let's just really quickly, if we were to take a mini lot, same Ralph trade, okay, let's say we're taking the same Ralph trade, it's only a 10 pip stop loss. How much would I lose if I took a 0.10? How much would I lose? $10, perfect, or 10 pounds, perfect, right? So you guys can see there's a big difference. This would be the exact same trade, 10 pip stop loss, but if I decided to take a mini lot instead of a micro of 0.01, I'm going to lose $10 instead of $1. Okay. And I think some people, when they first start trading, they think, well, 0.10, what if I just moved it up to 0.03? That's a small difference. It's not going to make that big of a difference. It makes a difference. Okay. And then the same thing, if we just look very, very quickly at an Edris trade, 0.10, I would lose, I'm just going to put it in there, $35. Okay. So again, there's a big difference between $35 and $3.50. Okay. Super, super important. Okay, super important. And then standard lot, okay, is 1.0 or higher. It could be 1.0, 2.0, 55, 100, right? You could just keep going. Okay, but this is $10 or 10 pounds per pip. So if you had only $100 in your account and you put a standard lot, that would only need to go 10 pips into drawdown and you'd blow your entire account. So just be very careful when you're entering these numbers. It can be easy to kind of mix them up. But yeah, a standard lot, $10 per pip or higher. 2.0 would obviously be $20, 3.0, $30, so on and so forth. Okay, so any questions about this before we move on? Okay, because I'm going to go on to the next slide. Now, there is ways to calculate this. You don't have to calculate it manually all the time. I always show beginners how to do it like this because I think it's important for you to just understand how the market moves and how much, we're going to lose or win based on that movement. Okay, but there's things called lot size calculators that you can use so you don't have to manually calculate this every time. Okay, but any questions? Can we have the lecture material at the end of this call? Yes, I can send my PowerPoints into the chat. That would be fine. I'll put it in the affiliate chats because you're probably not in my group chat. So just ask your upline afterwards. Okay. Steenie was a good lot size calculator. Okay. Yeah, perfect. Thank you. Okay, cool. So let's keep going. Okay, okay, hold on. There's questions in here. Number one, how can we grow a small account? How can we manage losses when our small... Okay, so number one, you put, how can we manage losses when our small account blows up? Well, you should never blow an account if you're using proper risk management, right? Even if you have $100 and you're using a 0.01, you would need to lose 100 trades in a row of a 10 pip stop loss for you to blow up your account. So if you've blown your account, you're risking way too much. It's so simple. If anyone ever tells me gold, it doesn't matter, Joka, it doesn't matter if it's gold, it doesn't matter if it's Bitcoin, it doesn't matter if it's Euro USD. If you've risked the proper amount, you won't blow an account. I should, that rhymes. That was a good one. If you risk the proper amount, do you know what? Anyways, right? If you've risked the right amount, you'll never blow an account. If you blow an account, you've done something wrong and you need to figure out what you've done wrong. Okay, so that answers that. Okay, how can you grow a small account? Well, again, it's very simple. You're just looking for a certain goal per day. If your goal is, I'm going to grow my account 2% per day or 3% per day, right? Now, that being said, if you're only starting with $100, you can't expect to get rich overnight, right? Even with $100, if you made $100 in a month, that's incredible because that's 100% growth, which doesn't happen in most people's trading account. So you need to be very, very realistic with your expectations, right? You can't expect to start with $100 and start making $500 in a month. It's just not going to happen. So if you can't afford to start with more than $100 in your account, you need to build the business because building the business is going to give you some capital to actually be able to work with, right? $100, $200, $300 in an account, you're not going to make a lot of money, right? Because how you treat $100 account should be how you treat $1,000, should be how you treat $10,000. This is why I talked about trading psychology at the beginning. I talked about it first because if you feel greed, if you feel fear with your $100 in your account, you shouldn't be trading, right? So you need to build the business. You need to build the business and make yourself some money if that's all you have to trade. Okay. But that being said, you just need to stay consistent. 2% per day, 3% per day. Accounts less than $100. Well, I just said, if you have less than $100, can everybody mute themselves, please? Everything well-being, mute yourself. Otherwise, I'll just start removing people who unmute themselves. Masolano, mute yourself. Thanks. Right. So yeah, Bitcoin, JP20, basically if you have $100 in your account, anything that has a 50 pip stop loss or more, you shouldn't really be taking those trades. Because if you have a 50 pip stop loss, you're going to lose $5, even with a 0.01. Right? So I'm not going to go back over the lot sizes because I did spend quite a lot of time. You can watch the recording, go back, take notes. Okay, this is what these sessions are for. You can go back and take notes. This is also on the ECA as well. Okay, I need to keep going, otherwise I won't get through everything. Okay, is it possible you can use US30 for demo account? Yeah, of course you can. Of course you can. Okay, so how do we actually take a trade? So we're going to go through, there's two different types of trades. Number one is a market execution. Again, I'll be writing all of this stuff down, and I also make it relevant to our educators. So I'll be writing that down as well. Okay, so market execution means we are entering the market immediately. Okay, now the majority of the signals that our educators give us, okay, majority of the signals are market execution. Okay, so if you get a trade from Plutos, always market execution. If you get a trade from Edris, always market execution. Okay, Donnie and Ralph have a mixture. Some market execution, some pending orders. Okay, but I've put there market execution unless stated otherwise. Okay, so you shouldn't need to kind of question yourself. If it doesn't say buy limit, sell limit, buy stop, sell stop, etc., okay, then you do a market execution. Okay, so that's the first thing. So as soon as you hit the buy button or as soon as you hit the sell button, you are immediately into the trade. Okay, now the second type of trade is a pending order. Okay, and there's a few different ones and we're going to break them down in a second. Okay, so pending orders is where we're waiting for the market to come to us. Okay, so we're waiting for the market to come to our entry price. When it hits that price, then it will activate our trade. So pending orders are quite good, especially for those of you guys who are busy. You can set a pending order and then just, forget it, right? Your MetaTrader 5 is going to automatically execute the trade when it hits that price. Okay, so now you've got a few different pending orders though. We've got buy limits and sell limits. So if you're someone who uses Monara regularly or you want to use Monara, then you're often going to be using pending orders, or sorry, limit orders. Okay. Now, buy stops and sell stops. If you have ever traded with Nigel, he is a Plutos educator. Okay, he often uses buy or sell stop orders, or his strategy allows you to use buy and sell stop orders. Okay, Papa Forex, Luis Neal, also uses buy and sell stops. Okay, so again, you know what to expect. Now, I'm going to actually show you the difference between limit orders and stop orders as well. So let me just share my whiteboard screen. 1 second, because I have to stop sharing this one. So guys, if you can just drop a 2 when you can see my whiteboard. And before I share it, don't write on my whiteboard. Okay? Because then you're gonna see the teacher Shannon come out and I'm gonna start to reprimand people. I'll start booting them. Okay, perfect. Cool. See, look at what people started doing automatically, writing on the whiteboard. If I look at Mr. Bonds, Josh, I wouldn't expect that from you. Guys, if you write on the screen, I can see who it is, so I'll just remove you from the Zoom, right? You may not be doing it intentionally, but if I see you, then I will just remove you. And I can't even make someone co-host. Yeah, I know, Josh. Especially if you're on a phone. Yeah, don't touch your screen. Okay, cool. So let's start with, again, so that's Sarah, can you stop doing that? Oh, cursors are hidden because, okay, cool. There is a way to block these. Dylan's iPhone, if you stop. I can't even make someone co-host. Tame, I was going to make you co-host.
Shannon, make me co-host if you can.
I don't think I can on this Zoom.
Or
Josh,
use the other whiteboard.
What other whiteboard?
You can use a different whiteboard where no one can write on it.
Okay, hold on.
If you go to screen and then document, it should be doing.
Okay. Share. Yeah, documents, whiteboard.
And then new. Should be new. Should be new whiteboard.
Yeah, I did that. Yeah, new whiteboard. But I don't know how to, hold on. I'll figure this out for next time. Whiteboard. There's a way to stop people from, hold on. Anyways, right. We might just have to, there's a way to do it, but I don't know how. Anyways, okay. I'm just gonna keep going. And the people who are drawing, you're just like children, like 250 adults on this call, and there's people drawing like 5-year-olds. See, this is teacher Shannon coming out. If you were in my class right now, this would be the point. This would be the point that you get booted out of my class. This would be the point. All right, cool. So let's just crack on. Okay. So
Hey,
first things first.
question. No,
Yeah.
I don't know if your computer's got like paintbrush or something like that where you can like maybe open up your notes or a paintbrush page and then you can write on that. Maybe that might be different.
Okay. I don't really know, to be honest. Okay. I don't know how to draw otherwise. Hold on.
Or like you could just create a new slide on your presentation for what you want to.
I just can't draw on a slide though, is the only thing.
Oh,
Because I
yeah.
draw out. I'll figure it out for next time. All right. Let's just go. Let's go. Okay, first things first, limit orders. Again, let's power through this. Okay, so limit orders. Okay, whenever you're taking a buy limit or a sell limit, okay, whenever you're taking a buy limit or a sell limit, price is going in the opposite direction of your trade. Okay, now that sounds confusing, but I'm going to break it down. Just write it down. Okay, so limit orders, price is going in the opposite direction of your trade when you set the order. Now, what does that mean? Okay, so let's start with a buy limit. Okay, so we are going to take a buy limit. Okay, and this is my entry price. Okay, this is my entry price. You guys are jarring. It's actually really starting to piss me off. I'm not going to lie to you. We're going to have to literally, it's so many. Fumi, you're going to get booted. So Fumi, you're going to get booted from the Zoom. I'm just going to start taking people out. So Fumi, remove. There you go. Peace out. Now you might not be able to get back on this Zoom ever again. So that would be something. Okay, Coach Adiva, I don't think you're doing it on purpose. Ifioma, I don't know if you're doing it on purpose. But guys, like we can't literally, you're supposed to be adults. It's actually super annoying. I'm gonna give it one more try. Otherwise, we'll just skip this part. I'm just gonna have to skip it. Okay, so hopefully you wrote down limit orders. Okay, hopefully you wrote down limit orders. Okay, so let's say this is my entry price. Now, remember what I said, limit orders, price is going to be moving in the opposite direction. So this is a buy limit. Buy limit means obviously I want the market to go up. I'm buying. But when I set a limit order, price is actually going to be moving down, right? The opposite direction. Market's going to be coming down. I want it to then obviously hit my price. When it hits my buy limit at this point of contact, that's when my trade is going to activate. Okay. And then, of course, we want it to buy upwards. Now, something really important to note. Okay. Is my trade, just because it's activated doesn't mean it's going to automatically go into profit. Okay. So the reason why an educator might send us a buy limit, okay, is because that particular price is a point of interest. Okay, POI stands for point of interest. So it could be that maybe this is a very strong support level. It could be that that particular price is on an 88%. So for those of you who are going to learn a little bit about Fibonacci, it could be on an 88% level. Okay. It could be an area of liquidity, right? Where they think it's going to come down and touch that area. Okay. But there's going to be a reason why, depending on the educator's strategy, why they chose that particular price. Okay. So what's going to happen is it might hit this price, but it's going to test this area. It's not just going to hit it and jump straight back up. It might push down a bit and then back up and then push down and then back up. If it does this a few times, it's actually a good thing because it's testing to see whatever point of interest this is, if it's strong enough to hold. Okay. So it might faff around, especially if you're doing like a higher time frame, 1 hour, 4 hour, it might faff around in this area for hours before it eventually makes its move upwards. So this is why your mindset's so important, because that trade might go into red and then back into blue and then into red and then back into blue. Okay, you need to get used to seeing red on your MetaTrader, especially with pending orders, because it's going to be testing a certain point of interest. Okay, now let's say if it was a sell limit, it's the same thing, just the opposite. So let me do that in red. And again, let's say this is my entry price. Now, again, a limit order market is going to be moving in the opposite direction. So price will actually be coming up. We want it to come up to our sell price. At this point, it's going to activate. And then we, of course, want it to go down. Okay, now the same thing for a sell. That price is chosen for a reason. It's a point of interest. Only this one, it could be this is a level of resistance. Okay, maybe the educator sees a strong level of resistance here. Okay, yeah. Could also be the 88%. Okay, could also be the 88%. Just mute this person. Okay, or it could be, again, an area of liquidity. Okay, drop a 1 if sell limits make sense. Drop it if limit orders, I should say, if limit orders make sense. Perfect. Okay, now buy stops and sell stops are even easier. Okay, so stop orders, let's write this down. So stop orders, price is already moving in the direction of the trade. So what does that mean? If I'm going to take a sell, okay, let's say this is my sell stop price, market's already selling. Market's coming down. We want it to hit that price and just blow straight through. Okay, so again, market's already moving down. We want it to hit this and blow straight through. Okay, same with the buy. If this is our buy stop price, market is already buying up. We want it to hit this and blow straight through. Okay, so stop orders are dead simple. Okay, market is already moving in that price. Now, why do you need to know this? Okay, this is important when you're taking signals, especially if you've seen a signal late. So let's say Ralph has sent a buy limit on Euro USD, but you're seeing it like an hour after he sent the trade, right? You need to be able to look and see if the trade is still valid. And if you know it's a buy limit, right? You know, okay, well, if Ralph sent this trade an hour before, it's going to be somewhere above this price, right? If this was our entry price. So if the market is still above, you know, you could take this trade. Does that make sense? So it's going to allow you, when it comes to taking signals, determine if a trade is still valid. Now, this is going to take time, okay? And if this is a little bit confusing, don't stress, right? You're not going to learn something straight away. It's going to take you time to figure this out. It's going to take you time to be able to look at the charts and see if a trade is still valid, okay? But if you can understand this stuff, this is going to help you determine those things, okay? So let's very quickly buzz along, okay? Because the faffing around with people drawing kind of ruined some of our time here, okay? So how do you actually take a signal? So we've gone through, okay, your trading psychology, something you're going to work towards every single day. Okay, we've gone through what a pip is, what a lot size is. Okay, and that helps determine how much money we win or lose. Okay, we've gone through the different types of trades we could take. Now let's actually look at our signals. Okay, so how do you take a signal? So if you're brand new, there's actually only 3 things you need to know when you go to take a trade. Okay, number 1, are you buying or are you selling? Okay, so that's the first thing. Are you going to hit the buy button or are you going to hit the sell button? Okay, number 2, or yeah, well, 1A, okay, is it a market execution or a pending order? Okay, because you might need to set up a buy limit, sell limit. You might need to set up a buy stop or sell stop. Okay, so that's the first thing that you need to determine. The second thing is, what are you actually trading? Okay, is it a Forex pair? Is it a commodity, an indice? Is it crypto? Okay, you need to actually look at the signal and figure out what you're trading and find it on your MetaTrader file. Okay, and lastly, when are you going to enter and exit a trade? Okay, now exit is your stop loss and your take profit. Whenever you enter a trade, you always need to have an exit strategy. Okay, you should never, ever, ever enter a trade, right, without putting in the stop loss and the take profit. The only time you're going to do that is if you attend Abdullah's session for US 30 scalping. That's the only time. Okay, any other time, you have to have your stop loss and take profit in place. Right? Because if you get distracted and you go about your day and you don't have a stop loss in place and that trade just takes off in the wrong direction, you're obviously, just looking to blow your account or lose a lot of money from your account. Okay, so very quickly, now this one's going to involve some interaction on your guys' part. Okay, so first things first, this is a dffierence signal. Okay, so someone tell me in a chat box, am I buying or selling? Okay, so take a quick look at the signal, look at the information you've been given. In the chat box, am I buying or selling? It might be kind of small. Good, buy. Right? It says right up there at the top, buy 5 minutes. So it's giving us a time frame. This is a scalp. So we can anticipate that this trade is probably going to be done relatively quickly. Okay. So number 2, or rather 1A, is this a market execution or a pending order? Based on what I told you guys, is this a market execution or a pending order? Okay, we got a mixed bag. Some people put pending, some people put market execution. Based on what I told you guys, market execution unless stated otherwise. Now, if you trade dffierence, you can do both. Now, you'll often find if Felipe sends like a 1 minute or a 5 minute Bitcoin trade, it's often going to be market execution because it's moving very fast. Okay. If it's like a 1 hour time frame and it's a swing trade, you'll set up a pending order. So that one's kind of a trick question, but based on this information you've been given, it just says buy 5 minute scalp. Okay, so that would be a market execution. It doesn't say buy limit. It doesn't say buy stop. It says buy. Okay, now number 2, what am I trading? Again, just look at the information you've been given on this signal. What am I trading? BTC USD, good. Trading Bitcoin. When am I entering? When am I entering the trade? When am I entering the trade? What's my entry price? There we go. Okay, so it says entry 71,920. Perfect. Okay, now my exit. Now, when it comes to dffierence, okay, it says invalidation, which is like our stop loss. Now, if I were you, I would attend a dffierence basics. I'm not sure if Obi goes through this. Okay, but invalidation is if the trade, actually, you know what? I'm not even going to explain it because it's going to go way over your heads. Just put that as a stop loss for now. Okay, but for those of you who trade dffierence and you're looking to get into dffierence, okay, you want to wait for the candle to close below that price before you close the trade, right? Some people put that as a stop loss, lose the trade when it doesn't actually invalidate. Okay, now, if you're a beginner, just ignore that. But for those of you who are starting to trade dffierence, make sure you look into what I just said. dffierence is our crypto app, Shakira. It's our crypto app. Definitely suggest getting it. Speak to your upline about it because we're coming into a massive crypto wave and you don't want to miss it. Okay, then our TPs, or take profit, It's just slightly different on dffierence. It says exit. Okay, so you've got exit 1 price, exit 2, exit 3. Now, if you have a trade that has multiple take profits, okay, I get this question a lot. You know, how do I take TP1 or how do I take TP3, whatever? Okay, if you have it with multiple take profits, you've got a couple options. Number one, you could take multiple entries. So if there's 3 take profits and you want to hold it all the way to TP3, then you can take 3 entries. However, that means you need to split your risk. You don't want to risk 1% on 3 different trades, because that means you're actually risking 3% of that whole thing. Okay, so split your risk. If you have a small account, you probably can't do that. You're not going to be able to split your risk if your account's too small. If that's the case, just always go for TP1. Okay, don't take a trade and just put in TP3 and then just leave it and hope it hits TP3. Okay, you always want to have an entry that comes out at TP1. Okay, so let's practice again. Let's look at this one. Okay, number 1, am I buying or selling? And is this a market execution or a pending order? Okay, I'm buying. It tells me to buy US 30, so that's what I'm trading. Is this a market execution or a pending order? Market execution. Perfect. Doesn't say buy limit, doesn't say buy stop, it just says to buy. Okay, good. So you know this is a market execution. Now, again, I've got my entry price at 42,520. I've got my take profits and I've got my stop losses. Okay, now, again, you've got 3 different take profits. So always put TP1. If you have a bigger account and you want to take more than 1 entry, then you could put an entry with TP2. Then you could put an entry with TP3. But again, split your risk. Okay, one more. Okay, let's do one more. This one, okay, we've got to on Solex. Sorry, apologies for it's a little bit blurry, but you can't take a screenshot of those trades. Okay, so someone said, how do I split my risk? Okay, well, that just means let's say, for example, you were, I don't know, you've got a $500 account and 0.05 would be 1% risk. I'm just making this up for right now. Okay, so let's say you were going to take I'll type that in the chat box. Let's say you were going to take a 0.05 and that would be risking 1% of your account. Okay, so if I wanted to take 2 entries, then my first entry, I could just take a 0.03. My second entry, I could take a 0.
Oh, really?
Right? So I'm still risking. Oh. Who is that?
Oh,
Calvin.
dear.
Calvin, can you not unmute yourself, please? Thank you. You're still, I'm trying to mute you. There we go. Okay. So, Harry, does that make sense? So let's say 0.05 is a 1% risk for me. So I would just split up my lot sizes on 2 entries. One entry, I could do 0.03, another 0.02. So I'm still risking that 0.05, 1%. I've just split it across 2 different trades, right? So if I was taking gold, right, I would execute, I don't know, whatever it is. Let's say I'm doing a sell on gold. One entry would be a 0.03. The other entry would be 0.02. That makes sense? Hopefully. Cool. Okay, guys. So what's on the board now, or on the board? I really think I'm a teacher. What's on the screen? Drop a 3 if all of that makes sense. You understand how to take a signal. It's very, very simple, honestly. It's going to be the risk for each of these signals that is a little bit confusing. Okay. Right, guys. So we've literally been on here for an hour. Okay, we've been on here for an hour. I did want to go through and actually show people how to do this on MetaTrader 5, but because of people drawing on my screen, that kind of messed that up. This isn't a Manara call, so I'm not going to go through Manara. There is a Manara call on Sunday, right? This is a Forex for newbies. Okay, this is going through the fundamentals. For those of you who are late, you're going to just need to watch the recording because I've just spent an hour. And if you're late, I'm sorry, that's on you. Okay, cool. So guys, are there any questions pertaining to what's on my screen right now? Okay. For micro lots, again, I'm going to send the recording. You'll just need to go back through it. Okay. It's very simple. Go through, take notes. Okay. ME is market execution. PO is pending order. I just shorthanded it. Okay. All right, guys. Well, yes, hopefully, you all got value from this call. I know we went through a lot of information. Like I said, at the beginning, if you're a beginner, continue to plug into these calls, right? I'll be doing this call every Thursday. So if you have more questions, you can always hop on. Next week, I'm going to find an alternative to that whiteboard so we don't take up so much time, and I can actually go through MetaTrader 5. How to take partials is something that I wanted to go through, but we didn't get time. Okay, so can you show what a pending looks like? I already showed that on my whiteboard. I'm not sure exactly what you mean by what it looks like, but it's just going to say buy limit or sell limit, and then the same information. There'll be an entry price, there'll be a stop loss, there'll be take profits. So yeah, it doesn't look all that much different, but you didn't explain how to. Yeah, so like I just said, I would have done that right now, but because people were immature and kept writing on my whiteboard, it wasted time. So, next week. Next week. All right, guys, I'm going to go ahead and close. Hope you all have an amazing rest of your evening. Take care. Bye. Oh, my YouTube page. Actually, I'll put that in the chat box because that's where I'm going to upload this first. So let me just get my YouTube link and I will share that in here. Because if you're not in my group chat, that will be the quickest way because I will upload it to YouTube after this. Give me 1 second and I will send you. If you don't want my YouTube, you can go ahead and hop off. But for the person who just asked, I'm just going to send you a random video from my YouTube so you can just follow my YouTube. 1 second. For those of you who want to trade US 30, the video I'm going to send right now is for US 30. So you can watch it. There we go. I've just put that in the chat box. Okay, so yeah, if you want to go ahead and follow my YouTube, any trainings I do with my team as well, I put on my YouTube channel. So of course you can go ahead and follow me and get any of my trainings there. Okay, guys, take care. Have an amazing rest of your evening, and I'll hopefully see some of you back next Thursday for more information and more, learning. All right, bye, guys.
Isa natin, isa natin, karo mo number.